CNBC-TV18.
On expected lines, the Nifty is up 30 points, sensex is up 45 points.
Flat on the benchmark indices, the mid-caps too, trading absolutely flat.
Nifty is up 8 points. It has recovered from the lows, but nevertheless, it is in that consolidated range.
The market not doing very much at all on the Nifty. Actually, the mid-cap and the small-cap indices are doing only slightly better. There was a bit of a sort of sell-off towards close, so the Nifty will end lower. The Bank Nifty ends slightly in the red.
Hello and welcome to CNBC TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for the day. India's stock markets take a breather after Friday's blistering rally. Sensex and Nifty end flat with a negative bias after a range-bound trading session. Metal stocks surge as China's economy opens up. Pharma stocks falter as weak quarter-end guidance along with governance concerns weigh on Aurobindo Pharma, while margin pressures haunt Alkem. Natco also sees a cut after Walgreens files an antitrust lawsuit in the US regarding its cancer drug Revlimid generic. Grasim reports a weak set for the second quarter, missing street estimates on net profit, revenue and EBITDA. Bharat Forge also posts a weak performance that pushed the stock 3% lower after margins fell 590 basis points and long-term debt rose. LIC posts its biggest gain since listing intraday on the back of strong premium collection and new business. InfoEdge also clocks gains of 6% after revenues grew above 50% for the fourth consecutive quarter. Meanwhile, Zee Entertainment and Sun TV take a beating as weakness in advertising revenue weighs. Wholesale inflation dips below double-digit mark to 8.39% in October, sees a massive drop from September when it was 10.7%. All eyes on retail inflation data to be released shortly. RBI governor expects CPI to be under 7%. All right, those were all of the top stories that we're tracking. Here's a lineup of what we have in store for you. It's a packed show this evening. In Market Opinion, we have Prateek Gupta, CEO and co-head Institutional Equities at Kotak Securities. And in Big Corporate Voices, we have Satish Pai, MD of Hindalco. Well, straight to the market action this evening. It was a day which was quite quiet on Dalal Street, which saw consolidation as markets await inflation data this evening. The range-bound session saw the Sensex, Nifty and Nifty Bank end flat, but with a slight negative bias. But mid-caps fared slightly better. Prashant Nair is here with all the day's trading action. Prashant.
Well, the market paused, consolidated for the bulk of the session, and towards the end slipped a little bit. Nothing large, small cuts, but not just the Nifty, the Bank Nifty and the mid-cap index also ending in the red. The small-cap index ended with a gain of about 0.4% or so. Market breadth also slipped. It was exactly almost 1:1, but declines outnumbered advances by the time we shut shop at 3:30. FMCG and PSU banks saw some pullbacks. Again, these were marginal moves. And what did well was metals, real estate and the IT services space. IT services stocks have been doing well over the last many sessions. Nifty gainers, large caps, Hindalco. There was Apollo Hospitals and Tata Motors which ended higher. On the losing side, you had names like Dr. Reddy's, ITC and Coal India. I have to say, although declines outnumber advances, but the number of stocks which went up on huge volumes, I think it just completely dwarfs what was happening on the losing side. So it's a long list, but look at Naukri, that's InfoEdge, look at LIC, Cochin Shipyard, some of them, of course, reacting to numbers, others not. Manappuram, Fortis went up almost, actually back above 300 rupee levels. Ircon, Dr. Lal Path Labs, Godfrey Phillips, Dredging Corporation, MedPlus sort of came off the day's high, but big gains there. Newland Laboratories has been having a fantastic week. Kim's, the hospital chain, Angel, Action Construction, Repco, and so on and so forth. As I said, it's a long list, but important to highlight the breadth of the move that we saw in the broader space. So a quiet consolidation type of session today. You'll hear from a lot of regional Fed presidents over the next couple of days. Actually, there are 14 Fed speaking engagements lined up this week. And why that is important is because markets will wait to hear from Fed officials about their interpretation of the market's reaction to the softer inflation data and the subsequent up move. So that's where we're at. A bit of a consolidation, slow kind of session, but we'll pick all of this right up when we come back tomorrow morning.
Okay, all right, Prashant. Thanks very much for that. Let's get in some expert opinion then. Pratik Gupta, CEO and co-head institutional equities at Kotak Securities, says that India has outperformed all emerging markets by a huge margin. He added that the new age companies may see some short-term disorderly selling.
India has really outperformed by a mile compared to other emerging markets this year. Just to put some numbers in perspective, India is up about 5-6% year to date, whereas China, for example, is down some 25-27%. The MSCI EM index is down about 25-26%. And we think we're getting to a point where valuations are really getting stretched. India is now, the Nifty is trading at about 19 times FY24 earnings, 17 times FY25 earnings. And the premium to MSCI EM has now gone up to 100%. So India's always traded at a premium, but this time around, it's gone way beyond the normal range of about 40 to 60%. In the short term, there is a risk of a disorderly selling that can come about. If all the sellers who are locked up, they rush to sell the stock at the same time. But typically, in our experience, we've not seen that happen. Most of the sellers are not necessarily desperate sellers.
Okay, so that's the opinion that we got through the day. But on to the second headline that we're tracking now. Pharma stocks faltered as weak quarter and guidance along with governance concern weighed on Aurobindo Pharma. Margin pressures haunted Alkem, while Natco also saw cuts after Walgreens filed a US antitrust lawsuit regarding its cancer drug Revlimid generic. So just to take you through a couple of key points with regards to a couple of these companies, Aurobindo Pharma did allude to a lot of competition in the oral solid space in their conference call, and this competition led to price erosion. Their guidance for injectables also, which was $650 to $700 million, has now been pushed to FY25 versus FY24 earlier. Now, there have been concerns with regards to one of the promoter directors, Sarath Reddy, and they did clarify that he was looking at IT logistics. His responsibilities will be reallocated, and he will probably be a non-executive director going forward. Alkem, margins were hit. 15% is what they've reduced the guidance to versus 16% earlier. And the US business was impacted by double-digit price erosion. The likes of Nomura have downgraded the stock to neutral and cut the target price as well. Well, a couple of other companies which were in focus included something like MedPlus as well, where there was a net addition of 348 stores. They are focusing on new cities as well. And the company and brokerages were quite positive with regards to MedPlus. Credit Suisse, for example, has upgraded the stock to outperform from neutral. They've cut the target price to around 750. They believe that there are benefits from a maturing store network. Nomura has reaffirmed their buy on MedPlus with a target of 928. Remember that they were also participating in the Axis Capital Rising Stars conference today, so maybe a lot of added momentum on MedPlus. Separately, lastly, the likes of Natco was in focus, Dr. Reddy's was in focus because there's a US antitrust lawsuit with regards to the cancer drug, the blockbuster cancer drug Revlimid generic, which Walgreens, which is basically a distributor of pharma drugs in the US, has now filed against BMS, which is basically the patent holder, as well as Teva and Natco, which were the first launchers. Teva and Natco are in partnership for this particular drug. And what this could do is probably increase the risk of litigation on other companies which have settled with BMS as well, the likes of Dr. Reddy's, and hence you probably saw a decline on account of this piece of news. So that's all what took place in the pharmaceutical space. There were also stocks such as Fortis, which were higher on the back of their numbers within the entire space. But on to the third headline then. Grasim reported what was a weak set of numbers for the second quarter of the fiscal. The cement company missed street estimates on net profit, revenue and EBITDA. Nigel D'Souza is here with more.
Well, Grasim's numbers actually were a bit of a miss, but that's a standalone entity. Remember, for Grasim, you get bulk of its share value from its holding in UltraTech Cement. And the street is pegging its hopes that the cement business will do well. That's UltraTech Cement. So this is an indirect way of playing the cement business. Now, in terms of their numbers, the top line, the EBITDA, as well as the profitability, well, it was lower than what our poll dropped. So that goes down as a miss. And the segmental breakup, well, the chemicals business did well, and that was expected to do well. However, the VSF business was a little more disappointing than what already the street was waiting by for. They gave some comments as well on the paint business, and they say that the first plant will be commissioned from the fourth quarter of FY24, and from there on, you'll see other plants as well that will get commissioned. So all in all, the standalone numbers were a miss. The street is pegging its hopes on the cement business recovering, and as I said, it's an indirect way of playing UltraTech Cement. And also in the next 18 months or so, you'll have the paints division that will start contributing.
Okay, all right, Nigel. Thanks very much for that. Let's move on and stick with major earnings then. Bharat Forge lost around 3%. This is after a weak performance that saw margins fall 590 basis points and long-term debt rise. Sonia Shenoy, who's been tracking these numbers, joins in with a wrap.
Well, thanks a lot for that. Now, Bharat Forge was under pressure after reporting very weak set of numbers in Q2. The biggest disappointment really came on the margin front, where the margin for the company fell 590 basis points year on year, coming in at 24.3%. It was also a steep sequential decline for the margins. Apart from that, the company had recently undertaken 2 acquisitions, because of which the long-term debt has risen 8.5% to 2,510 crores. Not just that, the overseas subsidiaries of Bharat Forge are under a lot of pressure. Overseas subsidiaries had posted both EBITDA as well as a PBT loss in the quarter gone by. Now, when we spoke to the management indicated that the overall demand trends are stable, but in the overseas market, there is quite a bit of pressure in markets like Germany because of the supply side situation over there. The debt has gone up because of the 2 acquisitions, and they mentioned that both these acquisitions are doing pretty well, and they hope to see results very soon. The other thing that the management did speak about is that they expect a stable performance going forward in both the export as well as the domestic market, and the European aluminum operations will show a gradual recovery over the next 2 quarters.
Okay, all right, Sonia, thanks very much for that. Meanwhile, Baba Kalyani, the CMD of Bharat Forge, said the company is facing a challenge in Germany and their real problem lies in the German market. He added the situation will improve in the coming quarters.
The real problem is in Germany. Germany is facing some acute inflationary issues on energy and other inflationary pressures, and a lot of disruption in supply chains, and I think that is what has impacted our business. We had geared up for higher production and therefore had higher manpower in place, and that didn't happen. I think it will take another 2 quarters and we will be back to where we were. We have had a fairly good record on our German aluminum business. Ever since inception, it's never made a loss. This is the first quarter that it's ever made a loss, and I think we have taken some corrective actions. Hopefully, it will be all right in 2 quarters.
Okay, so that's the word coming in from Bharat Forge. Time for a break now, but stay tuned. We'll be back in a jiffy with all of... Welcome back. You're still tuned in to Markets Today on CNBC-TV18. Let's get to all of the rest of the headlines that we're tracking for you this evening. The 4th headline today, then, LIC has posted what was one of its biggest gains since listing intraday, rising 5% on the back of strong premium collection and new business. The insurance major's profit after tax also rose 10 times. Surbi is here with more details.
LIC has posted a really strong growth in their premium, in their net premium and in the value of new business. Their net premium has grown by 26% on a year-on-year basis, and their solvency has also improved on a year-on-year basis, now standing at 1.88. Their PAT has inflated 10 times, but this is just because of changes in the accounting policies regarding the investment income. The annualized premium equivalent, the APE, has grown by over 45% sequentially, and the value of new business has grown by 63% sequentially, leading to a 160 basis points of VNB margin expansion, and now is at 15.2%. The VNB margins were driven by better margins on the group business. Their embedded value has seen just a growth of 1% on a year-on-year basis, which is a point of a concern. Overall, really good numbers from LIC, but only the slower growth of the embedded value is a little bit of a worry.
Okay, all right, Surbi, thanks very much for that. That's on LIC. Meanwhile, Info Edge clocked gains of around 6%. This is after a strong second quarter performance. The company's revenue has grown above 50% for the 4th consecutive quarter. Reema's here with more details.
Thanks so much for that. So very strong growth numbers coming in from Info Edge. The top line growth has seen a growth above 50% for the fourth consecutive quarter. In Q2, it was a 51.2% growth. Margins are expanding to about 34.5%. Up 440 basis points year on year and higher by 240 basis points on a quarter-on-quarter basis. One of the reasons for the margins improving is the fact that the ad spend as a percentage of revenue has been coming down. In this quarter, it stands at 15.6%. Now, Info Edge is a combination of multiple business. The key over there is the recruitment business, which comes under the brand name of Naukri. And Naukri revenues have been super strong for the last many quarters. In this quarter, Naukri revenues have gone up by 63%. Their EBITDA margins are above 60%. Apart from that, they also have a real estate online portal called 99 Acres, which helps connect the developers to the consumers. And that also has seen an acceleration in revenue growth this quarter, close to 45% top line growth. They have two other businesses. One is Shiksha, which is into education, and the other one is Jeevan Sathi, which is sort of a matrimony website where they have a market share, a market positioning, which is third right now. But the key driver for Info Edge for the last many quarters has been the recruitment business, and in that the IT services revenue growth, IT services hiring, because that's been red hot. But right now, in the interview that we had with the management, they did indicate that IT hiring is seeing signs of moderation, so some acknowledgement that things could slow down on the IT hiring from here on. So the question is, will this result in some slowdown in the recruitment business and therefore the overall business? That remains to be seen. Back to you.
Okay, Rima, thanks very much for that. So that's on Info Edge, but let's focus on Zee Entertainment now. That stock was down close to 2% on the back of a weak EBITDA margin as well as subdued advertising revenue. Speaking to CNBC-TV18, the company's CFO Rohit Gupta said the company is cautiously optimistic on advertising revenue. Listen in.
We are cautiously optimistic. I mean, H2 has started and October has started well. But then again, that's also because of the onset of the festive season. Really, the underlying demand has to come back, and we are hoping that it should come back. But right now, there are no immediate signs as such. Like I said, I'm hoping that there will be some green shoots that will emerge in the H2, and this will lead to gradual recovery in the overall advertising sentiments across the industry.
Okay, staying with the media space, Sun TV lost 9% in trade after posting a weak performance too as well on the second quarter of the fiscal. Vahishta is here with a wrap on the company's performance this time.
Well, Sun TV has been sulking in trade today, and the results were declared on last Friday post-market hours. When the revenues have declined 3%, the street was expecting upwards of 900 crores, when the actuals have come in at approximately 220 crores. The growth was dragged due to weak advertisement environment, which came in at 340 crores. Now, remember, the advertising environment as a whole has been subdued, which was also highlighted by Zee in their Q2 results, which were out last week. The subscription revenues for Sun TV fell due to a pricing embargo, which was ahead of the implementation of the new tariff order 2.0. Sun TV's margins, though, were stable at about 65.1%, and the company has 4,000 crores of cash on their balance sheet. They announced a dividend of 3.75 rupees per share, and hence there is scope to not only sustain but also raise the quarterly dividend, considering the strong cash generation and the large cash that they have on their balance sheet. The UBS has a target price on the stock of 600 rupees. Back to you.
Okay, all right, Vahishta, thanks very much for that. So that's on the entire bunch of broader market stocks reacting to numbers. But let's move to the macros then. And the fifth headline today, the wholesale price index for October has softened to nearly 8.4%, breaking its 18-month double-digit streak. Core inflation has also significantly reduced to 4.6%, reporting the lowest figure that we've seen in 22 months. Speaking at the Hindustan Times Leadership Summit, RBI Governor Shaktikanta Das elaborated on the Reserve Bank's position on inflation.
Our estimate is that India will this year grow by about 7%. The IMF has projected that India will grow by about 6.8% in the current year. And that puts India among the fastest growing major economies in the world. We have a major challenge with regard to inflation, but comparatively, if you see our target, the upper ceiling is about 6%. The last inflation number which was released for September, the inflation was 7.4%. We expect the October number which will be released on Monday, we expect that to be lower than 7%. Any inflation above 6% is detrimental to growth. So therefore, 6% has been kept as the upper tolerance band. And the fact that we have a tolerance band, between 4 and 6%, that gives RBI enough policy space to use during times of stress.
Okay, so that's the RBI governor talking about inflation. We will have the CPI data to reckon with soon enough. But L&T has announced the completion of merger between L&T Infotech and Mindtree. The parent company will hold 68% stake in the merged entity, LTI Mindtree. All shareholders of Mindtree will receive 73 of LTI for 100 shares of Mindtree. The record date for share allotment will be the 24th of November. Chairman of the group, A.M. Nayak, also spoke about what the merger holds for the shareholders of L&T Infotech and Mindtree.
LTI Mindtree has now become a reality. The two companies will start operating as a single entity starting immediately today. As a part of the merger, all shareholders of Mindtree will be issued shares of LTI at the ratio of 73 shares of LTI for every 100 shares of Mindtree.
Okay, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.